All right, we're now streaming live. We're with Mark Ferguson with MVB Mortgage again. We talked to him last week and got a little market conditions. Has anything changed much from this week to last, Mark?
A lot. We're still in the big picture of the mortgage world. We're still just seeing things kind of shake out, and interest rates remaining pretty flat, and so it's still an exceptional time to be financing a home.
That's great. That's great. One thing we didn't delve too much into last time are sort of the meat and potatoes of what are the options when you're looking at financing your construction loan, your products. What are the options? Home equity line of credit compared to a construction loan, your cash out refinance, those sort of things.
Yeah. So, and what most people would be familiar with are kind of your traditional financing resources that are out there. You can, as you just mentioned, you could do a cash out refinance, which would, replace your existing mortgage, add cash to it for the project, and then you'd still have your traditional mortgage. A home equity line of credit, which would just be a second mortgage or just, an additional loan on your home to pull, to extract equity from for the project. And those are certainly great options. What in many cases, what we see though, is that those particular products can create some limitation on how much of the project you can finance, because they're going to use today's value for the purpose of determining how much you can borrow. That's where a construction loan comes in. It's something that we see and utilize very often, is something very specific, a construction loan that uses the builder's plans and specifications and budget to help the appraiser determine what your home will be worth as complete. So once the project is finished, and we're able to actually use, the construction loan actually allows us to use the market value based on a completed value for the purpose of determining how much we can finance. So it's actually allowing people to use future equity and subsequently, potentially capitalize on a lot more borrowing power.
Absolutely. So in really super simplistic terms, your house is worth a $500,000 now. You have a little bit of equity into it, but you can only borrow up to that equity or a percentage of equity, whatever determined by your credit burden. And then if your house is going to be worth, the future value is going to be worth $1 million, then you have that much more to borrow against. So
that's exactly, yeah, that's exactly right. And actually, in this market, in a lot of places like where you're building, Chad, and in Arlington and markets like that, we often find that based on the project, the finished value often is notably higher than what the current value plus the cost of the project is. And so, in this market particularly, if you're adding square footage and you're adding bedrooms and bathrooms and so forth, the home that you're going to be, or the finished product now is comparable to obviously larger homes, and you see market value grow exponentially. And as a result of that, now you have so much, potentially have so much more leverage to borrow a lot more of the project cost.
And at the end of the day, that means you can keep more of that money in your pocket and have more in the project, keep more cash in your pocket, or work out you can, instead of carrying two mortgages, you can build in an interest carry if there's enough room in it or something like that.
Sure. Yeah. I mean, there's certainly creative ways to make sure to help folks manage the cost of the project, both throughout and of course at the finish line. And at the cost of borrowing money in today's environment, certainly ultimately it's a very subjective question, but really we're focused on what's comfortable for people. Budgeting is the huge, most important first step in this whole process. And there's I always tell clients, there's the objective point of view, there's the black and white numbers, there's how much cash you have, there's how much of a loan you can take out based on both on your qualifications and how much equity, both either current or future, that's there for you. But subjectively, what does this look like long term for you? Because after this project is done and you're moving back into your new beautiful home, what does the next several years look like? Because your mortgage is going to be based on what you had plus what you took out. So budgeting is it really should be the absolute first step before you do anything else.
It's figuring out what your monthly payment is going to be, trying to project what your monthly payment is going to be. That's what sort of the conversation that you like to have with them early on is what they're comfortable with in that regard.
Without a doubt. Yeah, because there really needs to be an expectation long-term in, okay, when all this is said and done, what am I looking at monthly? And also, what do I have in comfortably, what do I have in spendable cash to put towards this project? Because, you don't want to spend every dime you have. You want to make sure you've got some cash in reserve and potentially find a balance of cash that you're comfortable spending along with what you're able to finance.
Absolutely. I think this is, we walk into a lot of folks' houses when they're considering new construction, when they're considering a major renovation. And in most cases, they have nothing. They have an idea. They would like to have more room, but they don't know where they want that more room, or they really don't have a clear idea of what things are going to cost, or where the ultimate cost is. So from our perspective, this is part of the first conversation we have with them. This is that first meeting conversation where we ask them, what are you looking for? What are you looking for in space? And then they come back to us, and they may have some pictures, they may have some ideas, they may have nothing. We may walk around the house and say, if it's an Arlington 1940s colonial or 1940s anything, that here in Arlington, everybody wants that true master suite with a true master bath. Those don't really exist in Arlington. They want that actual closets upstairs, something they can actually put things in and fit a whole hanger in. On that first floor, they usually want to expand the kitchen or redo the kitchen and get away from that galley kitchen. So we give them, just based on conversation, we give them a pretty detailed report, but there's still a lot of variables in that, and it results in a range of costs. And then we say, we'll give Mark a call and see what he says. And so they come to you with, I'm not really sure what it's going to be. It's going to be about this much. And then you kind of back them into, where they're comfortable with, I guess. Is that correct?
Yeah, and you just hit on a couple of great points, and this is where I find it extremely valuable. You and I talked earlier about hiring experts, right? I mean, this is a significant undertaking. Can be it's a pretty big deal, right? I mean, you're either building from ground up, you're doing a large, expansive renovation project. Folks are coming to you because of your reputation, because of your expertise in the marketplace. This is not the kind of thing you want to leave to some fly-by-night builder, to handle a project, something like this. And I'm a big advocate for a client should surround themselves, obviously from a builder perspective, but also the other partners involved in this transaction. There's the builder, the lender, and the borrower. They should surround themselves with experts. And so when you're talking about budgeting, one of the things that I'll sit down with a client and talk to them about is that, plan for the unexpected. As part of this budgeting process, Chad's given you a budget of X amount of money. You may, have you thought about, unexpected cost overruns? Have you thought about allowances for things that could, the decisions you may want to make later, contingencies in your contract to make sure that you can afford either upgrades or afford things down the road that maybe you hadn't expected. And those are things that we can build as part of this process, as part of the financing and application and processing, of all of this. We can help you and encourage you to build into this process to make sure that you don't have any surprises down the road. And that's really part of this consultative approach from the very beginning. And that's why you hire an expert.
Absolutely. And you're comparing yourself to, everyone has their local banker. And I think a lot of people might start by talking to their local bank, and the local bank traditionally just doesn't have the expertise and the experience level to do a construction loan. And their underwriters aren't so local. Their systems aren't so clear. We've worked together for 10 plus years. And so, you have a clear understanding of my qualifications. You have a clear understanding of where the market is. So you understand where things are at in Arlington. You can tell people with a certain amount of expertise that, this will work. Unlike the bank that has underwriters in California or underwriters in upstate New York, you have that local footprint here to help them out, and the product line to help them out. Some people come to me and say, well, the bank says to get a HELOC or a line of credit, and that's because that's all their bank allows, or all their bank offers is that HELOC or line of credit. And you have the ability to get them into those construction loan products and really tap into that future values.
Yeah, and you bring up a great point. When you take out, when folks use, and it's not necessarily a bad thing, but when folks take out a cash out refinance or a line of credit, that's just a money facilitation, right? Our responsibility as a construction lender is also to be a partner throughout construction, right? So our job is not only just to manage funding, but it's also to manage inspections, to ensure that subcontractors are being paid. We are truly a partner, walking them hand in hand through this entire process, from the day that they go to closing until the day that you're handing them back the keys and having them, and the occupancy permit is issued and they're walking back into their beautiful home. So it is, and it's hard to know until you experience it, how important and valuable that is to have another advocate working with them side by side throughout that process.
Absolutely. I wanted to touch on one thing you mentioned earlier about budget control and whatnot. We just did a interview with some past clients, and they came into the project and they were told to expect 30% or more in overruns throughout a project, and they were surprised that we kept them to their desired budget, kept them where they needed to be. And it's really about process. Our process works well with your process, because when we deliver our budget to you, it is pretty tight. The clients have made their selections. They know what appliances are getting in the house. They know what cabinets are getting in the house. So they know how that budget's going to work. They're not coming back to you they're not coming to you with a budget that includes allowances where they don't know what they're going to have, which is going to lead to future cost overruns. We're really getting in the house and really examining the plans and making sure that it's really buildable, because we don't want to put those clients in a situation long term where you've approved them for a $300,000 construction loan and we need another 50 grand and they don't have it.
Yep.
That's the danger we don't want to be to. Just like we don't want to install a kitchen that is so tight that if there's one wall out of plumb, that the kitchen won't fit. We want to have some wiggle room in there. We don't want to push those envelopes with those clients.
Yeah, and I will say, historically, I mean, we've had exceptional success with you and with Alair, and just that is such a big part of this whole process. But many more often than not, I would say 90+% of the people I work with in terms of construction lending, I mean, you're certainly doing all the traditional mortgages and things you'd expect. Yes, we do all that, but in terms of construction lending, I would say 90+% of the people that I work with, it's probably the first time. It's the first time they've done it. It's the first time they've either built from ground up or done something like this, and they don't know what they don't know. And that just brings me back to just ensuring that you're working with a reputable builder. Work with someone like you and Alair that has a reputation of budgeting effectively, that is not going to be hitting them with 30% increases throughout the process. Because listen, we can do a lot in the loan, but we can't always allow for that. So, the key here is trying to plan and prepare as early in the process, because if you and I and a client are on the same page with how to budget this project effectively, things are going to go very smoothly.
And we've done that in the past. We had a project I remember a few years ago where the client came in with a thought process of how he was going to do the renovation. It was going to do kind of from the ground up, and then it ended up the way that he wanted the ultimate renovation. We needed to do it in reverse order. So instead of doing small little clicks here and there, we delayed the project for a time until he had his finances in order, and we could do it all at once and all in one stream. So that's the early conversation before you break ground, before you get into the project. We want to have those pretty clear ideas of where we're going to end budget-wise, and we want to make sure that finance is really locked up for the short and the long term.
Absolutely, yeah. I would just sum it up by saying, budget effectively. Have a lofty budget, have a more of that comfortable budget,
Sure.
and plan and hire an expert. I mean, surround yourself with people who know what they're doing in this space.
That's wonderful. That was a great conversation, Mark. I'm sure the clientele and the folks listening found it very helpful. We'll disseminate that out and cut it up to the sound bites that Facebook likes and everything else likes. But there's some real good nuggets in there. I'll sign off now, and we'll talk to you soon. Thank you.
Chad, appreciate it. Thanks again for having me.
Take care. Bye-bye.